morning. Today we're presenting taxation system in Malaysia. Okay, let me introduce the topic today. Now we will get familiar with the Malaysian on how Malaysia practices the taxation system and why is tax important and what is the issue in Malaysia has been happened. So now, why we need to pay tax? We have three significant reasons for paying tax. First, economic development. Okay, when we pay tax to the government get the revenue, and then they will use these taxes as a fiscal tool to improve the economic growth. In result of paying tax, we also get another benefit contributed to the society. For example, bantuan sara hidup, peka, and also the 30 ringgit injected to the e-wallet recently, and also in the future we will also get 50 ringgit into our e-wallet. This is contribution to society. Now, among these two, we have also the increasing important sectors. The taxes can be used to increase the important sectors. For example, the country's security, scientific research and environmental protection, and also internet connection that we are enjoying. This one, right? Okay. Now, overview about the Malaysian taxation system. Now, Malaysia is actually adopting the territory system. By meaning, territory system is that only local income is taxed. Any other foreign income is not subject to tax. Regardless of resident, you are resident or non-resident, you are subject to tax if you generate the local income. Capital gains. Malaysia does not tax capital gains. For example, if you make capital gains in Bursa Malaysia or Rakuten Trade, you buy the stock or shares and you generate income, you are not subject to tax. Tax returns. Tax returns. Any company which prepare account from 1st of January to December, 31st of December, they are subject to prepare or file income tax returns for the following year of 30 April. Now, worldwide basis for taxation. For example, if you are a pilot, you are not staying in Malaysia for more than 182 days. So, how Malaysia will tax on this pilot? The pilot will subject to worldwide basis for taxation where the territory tax system is not adopted. For example, you are traveling around. The pilot is traveling around the world. So the pilot will subject to worldwide basis for taxation. Next. Now, what is the four current issue in Malaysia has been happened? Now, first of all, there are 79,786 taxpayers is failed to pay tax. Failure to pay tax can cause a loss in economic growth and revenue of government. So in order to solve this problem, the government and the IRB, they collaborate together and establish SVDP program. SVDP program is Special Voluntary Disclosure Program for the tax evaders. They will be offered as low as 15% of penalty. If not, you will be charged for 300% of penalty. For example, if you owe 100 ringgit to IRB, you need to pay another 300 ringgit, which means a total of 400 ringgit to IRB if you did not enroll in this program. Next. Now, this is a heated issue when GST is introduced and when Tun Dr. Mahathir is, is stand up as a government. Now, the argument between GST and SST, which is better? Now, in September 2018, GST was replaced by SST. However, the former Prime Minister saying that GST is effective and transparent compared to SST. But then the Finance Minister claimed that the GST will actually increase the burden of the citizen, but SST will not. So this is an issue, very heated topic discussion in Malaysia on why, on a comparison between GST and SST. So what do you think? In my opinion, GST in Malaysia is more transparent and can prevent from the taxpayers from avoiding tax. It depends on condition of the country that they are suitable for adopting GST or SST. Next. Okay, the next issue is the sugar tax. Okay, in Malaysia, 1st of July 2019, Malaysia has adopted sugar tax. For your information, a tax of 40% per litre will be implemented on all packaged drinks. But for me, in my opinion, sugar tax does not work. Why? Because no evidence to show that it can bring down obesity rates. And also, if you tax on sugar, if you tax on like Pepsi, Coca-Cola, the consumer will choose the other alternative by untaxed sugar drinks. For example, if you order teh ice, how many spoons of sugar or cream you need to tax? This is very confusing. And if you say teh ice kurang manis, how will be taxed? Is another issue, which there is no clear guideline on this. So how to solve this? Of course, by changing the lifestyle of consumer and conducting the campaign to increase awareness of the consumer. Next slide. Now, lastly, tax evasion. Now, this is between judge and the man inside. Now, read this dialogue. The judge say, we found out that during period 2011 to 2017, you have an undeclared taxable income of 1.5 billion owed to IRB. Now, the man is a slide say, first of all, political donation, including from the Saudi Arabian Finance Ministry, is not bound by tax law. Secondly, income from foreign sources is not taxable under tax laws. Okay, the judge say, reported foreign donations are assessed on case-by-case basis. When an individual recipient that is different, it's important to establish the main purpose of the donation and its origin. Okay, so what do you think in terms of political donation and foreign income? Okay, put it this way, if the government tax regime, then it is considered that the government recognizes the legality of the income. As such, it cannot be charged for money laundering or criminal breach of trust. Now, there are two factors we need to consider whether the political donation and income from foreign sources to be considered. First of all, political donation. Why political donation transfer to his own accounts but not party accounts? If you say political donation, the donation must be transferred to the party accounts but not individuals. Now, secondly, income from foreign sources. Yes, it is not taxable. But if IRB tax both school for foreign sources, then both school will not charge for criminal breach of trust and money laundering, which is, this is the boss school is trying to okay with the law, the tax law and regulation, which taught by Suffolk, his lawyer, his solicitor. Now, lastly, next slide. The conclusion is that just pay it. Pay taxes if you are enjoying fast-speed internet connection. For example, if you want to enjoy 5G internet connection in Malaysia in the future, you need to pay tax as a contribution. Pay taxes if you want a flying car. If you want a flying car in the future, then you pay tax. If you want a greater education in Malaysia, pay tax. If you want a better Malaysia, just pay it. Thank you.
So, good morning everyone and Madam Nusia. So, I hope everyone doing well today. So, let's get started. So first of all is what is taxation? So according to IRB, it is an amount of money which is taken from our earnings to help towards some of the cost of service we receive in this country. So there are two types of taxes, which is direct and also indirect. Direct tax is levied on a person or company's income and wealth. The tax is paid directly to the government, for example, income tax and real property gain tax. The statutory body who is in charge with the direct tax is the Malaysian Inland Revenue Board or LHDN. Meanwhile, indirect tax is referred to as tax excised to a person who consumes the goods and service and is paid indirectly to the government. Example of indirect tax are GST and also SST. The government body who is responsible for this indirect tax is Royal Malaysian Customs Department, which is RMCED. So, scope of taxation. An individual who is resident in Malaysia is taxable on all income accruing in or derived from Malaysia and on income received from outside Malaysia. The scope of taxation of an individual depends on his resident status. However, with effect from the year of assessment 2004, income received from outside Malaysia is exempted from the tax. Hence, an individual, either non-resident, is taxable only on income accruing in or derived from Malaysia. So types of income. So these are the types of income that we will pay tax. So it includes business or profession, employment income, dividend income, interest received, discounts, rents, royalties, premium, pension, and also annuities. So from the effective year of 2015, an individual who earns an annual employment income of 34,000 after the EPF deduction will be should register a tax file. So these are the tax rate for the company and also for an individual. Company with paid up capital not more than 2.5 million on their first 500,000 ringgit, they will be charged 90% of tax, and for the subsequent balance, they will be charged for 24%. Company with paid up capital more than 2.5 million, also they will charge for 24%. And tax rate for resident individuals will be depend on their chargeable income. The minimum will be 1% until 28% maximum will be charged. And tax rate for non-resident individuals will be maximum 25%. So moving to the current issue regarding taxation in Malaysia. So in 2020, the first is issue actually in 2020, the government has prepared 20 billion for financial stimulus packages, providing tax breaks and cash aid to affected company, as well as additional 620 million in March to support the affected industry and also employer. So tax measure for direct and indirect taxes are under income tax. Annual allowance for qualifying capital expenditures will be increased to 40%. A tax deduction of up to 300,000 ringgit will be given for expenses incurred on renovation and also refurbishment of business premises until end of the year. Double deduction will be also given on pre-commencement expenses incurred by international shipping companies for setting up their regional offices in Malaysia. And then tax measure for custom and import taxes. The Prime Minister Tan Sri Muhyiddin has proposed the following measure where service tax exemptions for hotels, import duty and sales tax exemptions on equipment and machinery for port operators, and also expansions on the value-added activities permitted in the licensed manufacturing warehouse and also the free industrial zone. The second news is in 2020 also, the government has prepared for economic stimulus measures. They allocated for a discount on electricity tariff for commercial, industrial and also agriculture sector. So commercial banks have introduced support packages that include emergency loans to support their SME clients, as well as flexibility for repayment of existing loan in addition to a decrease in the policy rate. Malaysia's central bank also cut its statutory reserve ratio from 3% to 2%, releasing RM 30 billion into the banking system effective 20 March to cope with the economic slowdown caused by the COVID-19 outbreak and the declining in oil prices. So the third news regarding the automotive industry. So car companies are busy finalizing their revised prices list following the exemptions of sale tax effectively 14 June 2020. So the suspension of the sales tax for car until December 31 is expected to provide a much needed boost for the sector following the economic fallout from the COVID-19. In the short-term economic recovery plan announced by the Prime Minister previously, locally assembled cars will be fully exempted from the sales tax, while imported cars will see their sales tax cut from 10% to 5% during the same period. So the fourth issue is regarding the health industry. This is the past year issues. In 2019, our finance minister actually Lim Guang Eng announced that no service tax for private hospitals, so they could provide affordable treatment. So in previous government, they imposed 6% GST tax. So Pakatan Harapan didn't impose service tax because they want to help those who need to seek treatment. So the government hoped private hospitals could reduce their costs to encourage more health tourists to seek treatment in the country. Doing so, it will increase the volume of foreign patient and also more profitable, particularly in the face of intense competition from neighboring countries that also promote health tourism. So these are the reference. Thank you so much.
Okay. Good morning to my lecturer, Madam Nusia, and all my friends. Today I want to present about the tax system in Malaysia. This is I will cover today. Basic concept and practice of taxation in Malaysia. Taxation can be defined as a compulsory payment by the government on income to help toward some of the costs of service we receive in this country. Tax revenue is usually used by the government to manage and develop the country. Malaysia has its own tax system where assessed on a current year basis and under the self-assessment system for all taxpayers. In Malaysia, the law governing income taxation is the Income Tax Act 1967. The transaction might include within the scope of the charge as provided in the Section 3 of the Act for Income Tax. This means that the tax shall be charged on income derived from Malaysia. Income earned from outside Malaysia will be taxable if brought into Malaysia and earned only by those who are resident in Malaysia. For non-resident, the tax should not be charged on income brought into Malaysia. Corporate income tax. Companies are subject to corporate income tax, real property gain tax, GST, and other tax. In other words, the company that conducting business will be charged the tax on the income accrued in or derived from Malaysia. Individual income tax. Individual income tax are subject to each individual which charge on income received in Malaysia or accepted in Malaysia from outside Malaysia. Income earned each resident individual has a different tax rate because it's calculated according to the chargeable income. The current issue in the taxation in Malaysia for the past 5 years. The tax system in Malaysia for the past 5 years is GST. Our Prime Minister that time, Dato Sri Najib, has announced a GST of 6% starting 1 April 2015, but there have some issue after the implementation of the GST. The first issue is higher price for goods and service. GST was a major factor in price increase which gained the attention among Malaysia. Everyone are forced to pay GST for goods and service. Most Malaysia do not agree that GST is introduced in Malaysia because they have to pay the higher price for goods and service. There will be some burden on people, especially for the lower income group. How can they survive if the cost of goods increase without increases their salary? Um, Based on my opinion, the implementation of GST is suitable for high income group because they can afford to buy whatever goods they want and don't have to worry about the price of food will increase. Second issue is GST will impact on small and medium-sized enterprise. The implementation of GST will affect the business too. This is because of the low demand in the market due to high cost of the product, where the businesses have to decrease the supply to meet the current condition of the low demand. The effect is the business have to cut down the expenses such as labor cost due to the lower output needed. This may result in high unemployment in Malaysia. Third point is input tax credit refund. Based on the GST regulation 2014, input tax credit refund should be made within 40 working days for online submission. For manual submission should be processed within 28 working days. However, after a few months following the GST implementation, the businesses have a long delay in the refund process, with some input tax credit refund taking up to 3 months to be processed. This will impact directly the efficiency of our export sectors. Many businesses are affected by this problem because it has given a big impact on cash flow. The last one is issue in purchase a new house. A negative impact on the real estate market because GST will add up at 8% of the cost of new home, which will lead to a decline in the demand of new home in Malaysia since home prices are already pricey as before. So this is reference. That's all for me. Thank you everyone.
Okay, good afternoon, everyone. My name is Xiao. So today I will put very simple. I'm going to present about the basic concept of taxation in Malaysia. Income tax in Malaysia is usually in the sense that is applied on a territory basis, which means only income source from Malaysia is liable for tax. That condition apply for both resident and non-resident, and regardless of where taxpayers are paid. The first one is a double taxation. Expect employees from countries which hold a double taxation agreement with Malaysia may be exempt from territorial principle. In this context, Malaysia may exempt the taxpayer from income tax. Next. So the second one is a special tax regime. Some expat residents may be subject to special tax regime within Malaysia, which applies certain additional tax benefit to income. The special regime only apply if employees are not already classified as resident and their employment does not last more than 60 days. Next. Specific industry. Certain industry within Malaysia do not benefit from a territorial principle and are taxed on worldwide basis. This includes the air transport, banking, financial service industry. Next. So what is the issue about the taxation in Malaysia? Next. So issuing tax invoice without supply of goods to facilitate fraudulent availment of credit cannot be put on par with inability of the buyer to check compliance of seller. So we have the GST input credit problem. So in the GST law does not provide the option to pay the tax on time when return could not file for reason like technical issue with GST portal. If a taxpayer is forced to file return belatedly due to factors beyond her control, then tax payment also become delayed. The consequence is like liability to pay interest for the period of delay in payment of tax. Next, income tax late filing penalty. Actually, you will have to pay more. If you are late when submitting your tax form, you will need to pay a penalty. This will give the unnecessary cost that can easily be avoided. The penalty will be imposed if there is a delay in the submission of the income tax return form, or income tax return form must be submitting within 30 days from the date stated on the form, or the period that has been set by the government. If you late after April 30, you will get the penalty 10% or more. Next. Narrow tax base. Problem with this Malaysia tax system in the narrow tax base. This is challenge for a government when trying to extract tax revenues. It has been previously reported that only 21% of registered companies in Malaysia are subject to income tax, and only above 15% of the labor force is paying individual income tax. But the part of the problem is that wages are too low. An issue various agencies and economicals have repeatedly raised. Next. Digital service tax. So in the case, all digital service has been taxed on 2020 January 1. Now, the foreign tech company which provide imposed online service to the riot. Example, software, music, video, or any other digital advertising is required to register with the Rakyat Malaysia Custom Department. They also have to change and transfer the relevant service tax to custom. Next. So in the conclusion, the issue in the tax system need to be taken into high consideration as it can affect the revenue and income of the country. So the government need to balance between the economy of the country with the need of the public by charging reasonable amount of tax. Thank you.
Okay, so I will start. Today I will be presenting the same topic we have been presenting, which is the basic and the tax principle in Malaysia, and also some of the current issues. This is my information. My name is Amir Adha bin Muhammad Jalaluddin, and I'm a bachelor in accounting student. So today it's going to be about basic and the principal tax in Malaysia, and also the current issue, if I stated, for the past 5 years. So first I have to say a little bit about what is tax. Tax is a compulsory financial charge or some other type of levy imposed upon a taxpayer, individual or legal entity by a governmental organization in order to fund government spending and various public expenditures. Tax is a compulsory financial charges which a government needs to in order to fund the government spending, and also some kind of their various public expenditure in order to help control the government, a country perhaps. Okay, so I will go straight into Malaysia tax system. I'll just go through briefly because everyone else already explained how it works. So every country has their own jurisdiction, their own laws, their own tax system, and it's just the same as other country. But what Malaysia has been implementing are not so different. But as we can see, they are assessed on a current year basis and other self-assessment system for all taxpayers. There are two most important one. As you can see, the corporate income tax. In Malaysia, corporations are subject to corporate income tax, real property gain tax, and goods services tax. In other words, resident and non-resident organization doing business and generating taxable income in Malaysia will be taxed on income accrued in or derived from Malaysia. Anything that has that have the sources from Malaysia or that has been done in Malaysia will be taxable. And for individual income taxes, as the name implies, individual income taxes in Malaysia is imposed on earned in Malaysia or received from Malaysia, such as income taxes. It could be from a legal entity in Malaysia or payment, the source of income is from Malaysia too. That could be taxable. So here I'm going to show a little bit of the tax rate. As you can see, some of the principle made in our country. As you can see, the standard rate for corporate tax is 24%. For residents, small and medium-sized enterprises is 70% on the first 600,000 ringgit and 24% for above 600,000 ringgit. For non-resident companies, it will be 24%. Will be the basis, 24%. As you can see, the other tax rate, cooperative company originating in territory of Labuan and operating a trading activity in this territory is 3% of the audited income. There are others too, but okay, I'll just proceed to the next slide. Miss, can you see everything? Hello?
Yeah.
Okay.
Yeah, I can see.
So I can proceed, right?
Yes, please proceed.
Okay. So these are some of the current tax issues in Malaysia, which all of us are fond of. We all been talking about the same thing, but I will just rephrase it for you guys briefly. The first one is tax avoidance as tax evasion, that people are usually don't take it seriously for. And then we have and then double taxation, GST, the most well-known one, and also the digital tax. For the tax avoidance or tax evasion, it's just simply the issue is we have been avoiding taxes, we have been evading them too. There are some differences between them. I already put the what is the differences here, not too much, but some kind of a summary. I will read it briefly. The most common means of tax avoidance is accomplished by claiming all your permissible deduction and credits. For example, contributing to a pre-tax retirement fund lowers your current taxable income. Some people do this in order to avoid to pay taxes. There are other ways too. Some examples, such as increase retirement savings or maximize work deductions, or even tax smart college savings like college plans, like you get something for your college plans and you can use that to avoid your tax. And the other one is tax evasion. Tax evasion is the worst one, which is you just clearly evade to pay. You just don't want to pay, which is very bad. Here we can see that both of these are still illegal. They are still illegal, which is not good because we as a resident in the country have to pay our taxes. Okay, I will go to the next issue, which is double taxation, as explained from Yap just now. Double taxation is an issue which is being implemented in various taxes, such as one I will explain later, which is digital taxes, which will deduct an extra taxes from the tax you are paying. Some kind of digital taxes when you're paying for the digital tax, and you're also paying for the service tax, or you're paying for digital tax from foreign country, from outside of our country, and you have to pay for the custom tax also, which is very, very not good, which is makes some of the people here not fond of. So the government decided to reduce the double taxation issues, and they also claim that they will try to not charge a double taxation to their resident, especially for the small new businesses, small businesses, something. For someone who is still new into this, not big enough, they will not implement this. But thanks, because the government decided to reduce and even eventually maybe just stop the double taxation, trying to find out if it's still implemented or not. Okay, so I will go to the next one, which is digital tax. This is a new one. It's not a new one. It's new in our country. It just has been taxed since January 1 this year. Since the online businesses, online transactions has been doing so well, there's a lot of things going on in the online transactions. They've decided to make a digital tax, service tax, in our country. Actually, we are the, if I'm not mistaken, we are the second one in Southeast Asia, which is the first one is Singapore, our neighbor country, who implemented this tax. So it is very good for us to take the earlier steps among other countries to do this. As you can see, it only charges on the services offered online that requires a payment to be made to the foreign company. It's only applicable to the foreign company payments that we made. And the issues is, like I said, double tax charges and custom charges, and also leads to paying a much higher price. You have to pay a higher price due to the double taxation, due to the custom charges. But the government has said that they will put that aside. Will try to only prioritize the digital tax. So the last one, the last issue I'm going to talk about is GST. Well known, all of us. It has been implemented twice actually. Have been implemented before, and then they implemented SST, and then now they use GST back. Okay, GST, known as Goods and Services Tax, is a tax charged to the consumers that is based on the purchase price of certain goods and services, and it is currently stands at 6% in Malaysia, fixed. Imported goods and services will also be charged at this rate. Some are okay, some are agree on these taxes, but some are not, and especially for the lower cost goods, like maybe you buy sugar, maybe you buy milk, maybe you buy some kind of groceries, and you have to be your tax is 6%, and it's kind of a lot because it's a low cost, low value, but you still have to pay the same amount, at the same fixed amount as the expensive ones. The value will be lower, of course, but still some people demand that the low value, you does not have to pay the 6% tax of GST. So but it is you're still making 40 billion a year to keep our country solvent during recent difficult financial times, such as now, which is our pandemic we're having, COVID-19. That's not been fully recovered yet, but still, because of that taxes, all that money, they can help us. The government can help us with some money and to help us go through our daily life, our daily spending. Without, some of us don't have to go to work or something like that, right? Okay, so I think that's all the current issues that I'm going to talk about. And conclusion, in a nutshell, my opinion, I think that taxes are made not just because they want to make taxes, not just because they want to sorry, not because the government just want to collect money. No, they need that money. They need that to, in order to control, to maintain the stability in our country. So whether we like it or not, we don't know the true intentions yet, but we still have to pay. It's a thing we have to do. So let's just trust the government and say that they are doing all this for our good, future, for our, for us or for the country. So we have to do what we have to do. We don't have to avoid the tax or evade the tax or not paying the tax. Maybe there are some issues, but I'm sure it's for the better good. So that's it for me. Thank you.